Holy smokers, guys, we're finally doing another episode of Sunday Stock Battle. And this time, we're pitting Home Depot versus Lowe's. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. Now, if you want to check out past episodes of Sunday Stock Battle, you can find the playlist up here down in the description or at the end of this video on a clickable card. If you guys like this series, don't forget to hit the like button and leave me a comment down below if you want to see any other matchups in the future. Also, don't forget to leave a comment for Ale's World Consensus and let me know which one of these two stocks you like the most, Home Depot or Lowe's. I'll tally up the results and I'll have that for you guys in the next episode. In the previous episode, we looked at Netflix versus Disney and 29 subscribers voted. So 29 of you guys voted and Disney absolutely crushed Netflix with 97% of the total votes. So you guys are clearly much more bullish on Disney in the long term over Netflix. And I agree, of course, because Disney is currently my #1 largest stock. But back to today's video, we're going to be looking at Home Depot versus Lowe's. And just so you guys know, I am not invested in either company and I never have been. I've never invested in either company. So hopefully not too much bias today, but there's still going to be a little bit of bias. A lot of this is my opinion. So make sure you do your own research, make your own decisions, guys. Don't ever invest in a stock just because of a YouTube video. But the way we'll be doing this today is we will run through the companies, their business. We will look at their current performance. We will look at their future potential. We'll look at their balance sheet. We'll look at their income statement, their revenue, their earnings, see how they're doing. We will also look at their dividends. We will look at their stock performance and their valuation. And all throughout, I will be awarding points for every single little category to either company. And then at the end of the video, we'll tally everything up and we will declare a winner at the end. Okay, starting with their business, both are very similar in that they own retail stores that sell home improvement and decoration products that ranges from building to repair and includes things like building supplies, appliances, tools, paint, lighting, and even garden care, and the list goes on. And there's not really much of a differentiating factor here, so chances are that if you visit either store, you're likely to have a very similar experience. However, when it comes to performance, we start to see a few differences here. Looking at the past 4 years, Home Depot brought in higher revenue every single year, usually by around 30 billion or more. And when looking at the growth rates of each year, Lowe's did have a pretty impressive 2016, growing revenue by double digits, but Home Depot had a much better 2017, and their 3-year average growth rate is just a tiny bit better at 6.8% versus 6.7%. And even looking at their revenues for 2018, Home Depot increased their sales by 5.1% in the third quarter year over year, with a year-to-date increase of 6.1% year over year. When looking at Lowe's, they came in lower in both areas at a third quarter increase of 3.8% year over year and a year-to-date increase of 4.8% year over year. So we'll give 1 point here to Home Depot because they do have better overall sales performance, which should translate to much more market share for them as well. So again, Home Depot will give them the point. Okay, but that's just sales. So how does that revenue translate to profits? In other words, which company is actually being run more efficiently? Well, let's take a look at their net income and their margins. No surprises here, net income totals for the past 4 years comes in much higher for Home Depot by 2 to almost 3 times more. And when looking at their earnings growth, despite Lowe's again having an impressive 2016, they actually saw a decline in 2015 and end the comparison with a significantly lower 3-year growth rate of just 8.8% versus Home Depot at 11%. And looking more recently at 2018, they increased earnings in the third quarter by 32.4% year over year and had a year-to-date increase of 28.1% year over year. While Lowe's came in much lower again with an actual decrease in earnings in the third quarter of 28% and only a slight year-to-date increase of around 8.5% year over year. And as you'd expect, Home Depot comes in with a much higher operating margin for the trailing 12-month period of 14.5% versus Lowe's at just 8% according to the Motley Fool. And Home Depot has really led that category for most of the past decade, showing higher improvements as well. and Home Depot usually does around double the operating cash flow of Lowe's. So once again, we got to give the point to Home Depot here when looking at profitability. Now, speaking of earnings, another important factor to look at is whether the companies are beating earnings expectations. So looking at EPS surprise for the past 4 quarters, Home Depot's chart is the top one here, and you can see that it looks better having positive surprise in each of those quarters, whereas Lowe's had a couple of bad quarters, even missing estimates pretty significantly. So we'll give another point here to Home Depot. Okay, now the next thing that I want to talk about is future potential, and this is very tricky because again, both companies are so darn similar that really opportunity for one of these companies means opportunity for the other one as well. However, Home Depot has actually controlled more market share in terms of their sales, so that can be looked definitely as a positive for Home Depot, but it can also be looked at as more opportunity for Lowe's to actually steal market share. In any case, I can't really go based off of market share alone when looking at future potential, but one thing that we can definitely look at is online sales. And the reason I say that is because if any company wants to succeed right now, and especially moving forward into the future, and especially when looking at these retail stores that are, that you can actually go to, like brick and mortar stores, you definitely have to have an online presence, especially when you consider that only around 12% of global retail is even done online. So that's really where I potentially see some growth opportunities. Now, according to eMarketer.com, when looking at the top 10 US companies ranked by e-commerce sales market share, Home Depot actually comes in at number 5. That's very impressive, and it's kind of shocking, to be honest. I wasn't expecting that, but Lowe's unfortunately did not make the list. And while I struggle to find online sales figures in their investor relations pages, the Motley Fool did report that Home Depot is having more success there, having increased online sales by 26% in the second quarter, with 47% of those sales being in store pickups that helped increase foot traffic, while Lowe's was only able to increase their online sales by 18%, which is still impressive. But again, we have to give the point here to Home Depot, as they appear to be performing better in the online retail space, not just against Lowe's, but even cracking the top 5 companies list in the entire US. I mean, really the top 10, but they made it to the top 5. So that's very impressive. Okay, so Home Depot is really in the lead right now, but let's move on to their balance sheet, and then we'll look at dividends and their stock and all that. Now, in their last quarter, Home Depot reported around $1.8 billion in cash and equivalents, with about $20 billion in current assets and over $45 billion in total assets. Looking at liabilities, they had over $18 billion in current liabilities, over $23 billion in long-term debt, and about $44 billion in total liabilities. So it's about a 1-to-1 ratio here for current and total assets to liabilities, only slightly more in favor of assets by a couple billion. When looking at Lowe's balance sheet, we've got about $1.7 billion in cash and equivalents, $15.1 billion in current assets, and $37 billion in total assets. And when looking at liabilities, they've got around $15 billion in current liabilities, over $14 billion in long-term debt, and $31.3 billion in total liabilities. So to sum it up, Home Depot has a slightly better current ratio with a couple billion more in assets, but Lowe's actually has a significantly better total ratio with around $6 billion more in assets versus liabilities. So it's really close, but I'm gonna give the point to Lowe's here, considering that Home Depot does have a bit more debt. Okay, last thing to check here before we look at the stock and their valuation, it's their dividends, and I love looking at dividends. And here we have Home Depot coming in with a yield of about 2.3%, a decent payout ratio of less than 50% at 42% to be exact, and an excellent 5-year growth rate of 21% and almost a decade of consistent growth. But when looking at Lowe's, their dividend yield is a little lower at about 2%. They have a slightly better payout ratio of about 37.5%, the same really nice 5-year growth rate of about 21%, so some pretty similar numbers here. However, according to Seeking Alpha, if these numbers are correct, Lowe's comes in with a massive, absolutely enormous growth history of 55 years of consistently growing those dividends every single year. So even though Home Depot does have a slightly higher yield, I have to give the point here to Lowe's because of that enormous growth history. Makes it a very reliable dividend. Okay guys, next up here, we're going to look at their stock performance and their valuations. Now both stocks look very similar, but Home Depot is up around 118% in the past 5 years, but is down about 7% in the past year. When looking at Lowe's, they're up a little bit less in the past 5 years at only 93%, which is still very impressive, but they are actually up in the past year by about 2%. So a little bit worse in the 5 year, but a little bit better in the past year. Now, we don't really see much of a difference until we look at their performance for the past decade, where Lowe's comes in at an enormous increase of 544%, but then you look at Home Depot and they really steal the show again, coming in much higher at an increase of over 880%. So the point here has to go to Home Depot when you consider that their decade performance is higher by around 300 more percentage points. Okay, and that leads us to the final point, and that's their valuation. Now, rounded off, Home Depot has a trailing PE of around 20, a forward PE of around 17. Factoring in future growth, their PEG ratio is pretty decent at 1.2. Their PS ratio is 1.9. So all of these looking pretty okay. But then we look at their PB ratio, and it's ridiculously high at over 150. Now, they are also trading below their 200-day moving average, but well above their 50-day moving average. And then when you look at Lowe's, on the other hand, they have a trailing PE of around 21, a forward PE of 16, a PEG of 1.2, a PS of 1.1, and a much lower PB ratio of just 14. They are also trading below their 200-day moving average, but above their 50-day moving average. And this one would have been close if it wasn't for that enormous PB ratio of Home Depot. But either way, Lowe's valuation just looks a little bit cheaper overall, so they get the point here. Alright guys, so to sum it all up, we've got Home Depot being the winner at a total of 5 points versus Lowe's at just 3 points. And overall, a lot of these comparisons were very similar, but it just really felt like Home Depot was really dominating throughout the entire match. So it feels kind of weird talking about this like it's some kind of actual battle. But anyway, I hope that you guys enjoyed the video. Let me know which stock you like more. On one hand, Home Depot is really dominating, but on the other hand, that does leave more market share for Lowe's to steal. And sometimes I like to invest in the underdog because they have more market share to steal. Also, don't sleep on that dividend. Much higher growth history, 55 years for Lowe's, only about 9 years for Home Depot. So, maybe I'd have to research that further, make sure it is really just 9 years, because sometimes Seeking Alpha gets those numbers wrong. But if that's true, 9 years compared to 55 years, that's a huge difference. So, very reliable dividend with Lowe's, very impressive. So, there's definitely some pros and cons here for each. Let me know what you think down below, and let me know which stock you like more, and I will let you guys know the winner in the next episode. I hope you guys enjoyed this video. I will catch you guys later. Make sure you hit the like button, and I'll see you later. Take care. Bye-bye.